Hey guys, welcome back. In today's video, we are talking about how there are no shares left to borrow, the AMC dividend play, the negative sentiment, and many more in this video. First, we're taking a look at this. With a CTB at all-time low in spite of virtually no shares left to borrow, there can't be that many shorts who believe the AMC share price will go much lower. Meanwhile, institutions are buying into AMC like crazy. So what we're seeing right now is you can see for the cost to borrow for AMC is to be at an extremely low value where we're looking at 0.42. In the past, we've obviously seen it at crazy numbers. And what we are seeing, however, in contrast towards the cost to borrow, is the lack of shares available to borrow. Now, we talked about the liquidity problems that's ongoing for these institutions. And with an increase in a lack of liquidity, what we are seeing is, of course, how shorts are failing to be creating these synthetic shares that they once had easy access to. And it's why we're seeing kind of the lack of shares being able to borrow. We talked about in the past the multiple methods. We talked about tokens, all these crypto tokens that were used and everything else. But right now, they are all struggling to do so because of the liquidity problem. But more importantly, it's because they are afraid of what's to come for AMC. When you take a look at this and you can see the institutional ownership, you can see how it's increasing. You can see how despite all of these media articles that you are seeing telling you to sell your AMC shares, telling you to stay away from AMC shares, institutions are actually buying into AMC. And this is something that we've discussed multiple times. You can even take a look at this. The fund sentiment score for AMC is 91.4 out of 100. So this is what we talked about in terms of understanding, whilst the media articles are giving a bad sentiment, a negative sentiment on AMC, when you take a look and you break it down to see what's actually happening with AMC, well, institutions are buying. Now, there's multiple reasons for this. Firstly, another thing to be looking at is the put-call ratios. And we can see here, the put-call ratio for AMC Entertainment is showing to be at 0.22. Now, when a ratio is less than 1, it indicates a bullish sentiment. So what we're seeing right now with the options at the put-call ratios is, of course, showing another bullish sentiment. So this is what we're talking about. Don't just be persuaded by the media. Take a fundamental look at actually what's happening. At the end of the day, it's important to understand, what's actually happening with AMC, what the investors are actually doing, rather than what the media is trying to portray. And so on one hand, the media is saying AMC is bad. But on the other hand, we're seeing everyone actually buying and accumulating more and more AMC shares. Now, the biggest reason, and one of the biggest reasons for why I think this is because of this post and what Biotech Moves has said. In case you missed it, a path forward to a dividend sooner than later, good luck short sellers. So this is talking about how AMC debt restructuring in July of 2024 provides a way to fast track a company dividend. So during its July 2024 refinancing, AMC created MoveCo LLC and moved 175 theaters, real estate, IP, and other assets to it. And so we know that in July 22nd, 2024, when MoveCo LLC was using the AMC restructuring deal, that AMC had $4.5 billion in debt. Under the restructuring of debt, this company was assigned $1.2 billion of the debt. So this is what we talked about, a subsidiary of AMC, which had a portion of AMC's debt actually moved under that particular company, so that particular subsidiary. Now, you can see now, obviously going throughout the year, we have had these offerings. We have had the offering recently. We talked about the 50 million share sales. And what we can see is that the 414 million, the July capital raise, plus 50 million, December 11, plus 250 million, the hedge forward purchasing agreement with Goldman Sachs, equals 714 million in debt removed from MoveCo LLC, the company that we talked about. So debt remaining before the firm becomes net positive is 1.2 billion minus 714 million, which gives us 486 million. So AMC will be 60% completed to a debt-free and a dividend issue. So this is very important because what does this mean? Well, AMC is working to remove the 1.2 billion debt held so that it can then issue a dividend from the subsidiary. Even a small recurring quarterly dividend paid to all shareholders with synthetics will be a huge cash drain on short seller. Is a checkmate move. Now we know why short sellers are aggressively fighting AMC tooth and nail to prevent it from raising any substantive amount of capital at all. They know with dividends coming sooner than later, it will bleed them dry and force them to exit their disastrous AMC short positions. As always, I highly recommend you guys to obviously take a look at this from Biotech himself. Now, this is something that we have talked about, and I want to break it down in more details for you guys. So a reason why a dividend, firstly, why it's important is because we talked about it. When a company issues a dividend, the short sellers are actually held responsible for paying the dividend first. So in this case, the short sellers who have shorted the multiple times flow of AMC, the billions of synthetics they have created, they will actually be responsible for paying those dividends first. Of course, any remaining shares will then be dividends paid out by AMC. However, you're asking, well, they've already created these shares. Why doesn't AMC just issue out dividends? Well, AMC firstly has to be in a good financial position, but not in just that, but the debt that was previously preventing them from issuing out dividends was something that they had to tackle as well. So that's exactly what AMC is doing. AMC, if they had the ability to obviously issue out dividend, they would, but you have to be first in good financials. And secondly, the debt that was holding them back is now what they're tackling. And it's why we talked about the $1.2 billion worth of debt. So now that we're seeing how all of this is unfolding, if what we've seen is all going down to this, with how all the money that's being raised recently, of course, not all of it will be used for debt, but a large amount will be, used for, firstly, the company growth, but also to pay off some of the restructure, some of the debt that we talked about in the past, then this would be a huge checkmate move. And it's precisely why we're seeing the short sellers worried. And it's precisely why we're getting, the bullish sentiment. Is why we're seeing all these funds accumulating AMC, because they understand what's about to come. And you can even see what Dave Murphy has said here. So you claim to have been hodling AMC since 2021, but you've had enough of the common and hedgy helper, quote unquote, CEO, so you say you're going to sell now at the lows. As the box office is officially revitalized with major blockbusters coming down the pipeline, and you have long-term capital gains. Yeah, okay. Either you desperately need money to pay bills, that I understand, or you're full of shit. The negative sentiment towards CEO Adam has reached a new all-time high. How does one drive down the price of a stock? Jim Cramer was a pro at it when during his time as a hedge fund manager. You create negative sentiment. If you don't like AMC CEO or the Project Cockman clowns are accepting members with perks. Now, this is what we talked about, and is why I think is very, very important, which is the negative sentiment that we are seeing right now on AMC. And firstly, like we talked about, a lot of people are not happy with in terms of some of the decisions made. In this case, we're talking about the recent 50 million shares sale. However, if what we are seeing right now, if the money that is being raised is being used towards AMC to be able to issue out a dividend, then I think that the pro outweigh the con any time of the day. So that's my first opinion. The second thing is talking about why there's so much negative sentiment. And it's what we talked about in terms of we really have to get into the details of this. Media articles, whether it's Twitter, whether it's YouTube, in terms of the comment section, we're seeing how people are always attacking CEO Adam. We're seeing how people are always saying that AMC is a bad stock, is managed badly, the people that are working at AMC are bad people. But again, this is what we talked about, how they're trying to portray AMC. Because at the end of the day, whilst they're trying to portray AMC as a bad company to stray retail away from this, we're going back to what we talked about at the very start. Funds are buying, institutions are accumulating. Why are we seeing all these negative articles, which is targeted, again, very importantly, these articles are all targeted towards retail investors, not institutional investors. Why are these articles that are targeted towards retail investors all telling you to stay from AMC, all the while institutions are buying? And again, this goes back to what we were saying about why and how they want people to go away from AMC so that institutions can accumulate from themselves. And you can see, here's the DTCC email explaining the 2.2 billion margin call the NSCC issued to Robinhood app that caused him to take away retail investors' ability to buy stock. And this is why we are precisely seeing why institutions want to buy into AMC and get the retails out. Because you can see here, when they had the value at risk, so the VAR charge of approximately 1.3 billion, as well as its excess capital premium charge of 2.2 billion, which Robinhood had not calculated, Robinhood calculated that out of 1.3 billion VAR, approximately 850 million was attributable to AMC and approximately 250 million was attributable to GME. Now, just in this case and just for Robinhood, we can see how AMC had a massive threat towards a broker, towards Robinhood in this case. And this is why we're seeing these articles telling you to stay away from AMC and why institutions want to get in, because of how much risk they were and still is to this very day. And you guys, thanks for watching the video. As always, now this is a financial advisor. Do take a second of salt. Make sure to do your own due diligence research, and I'll catch you guys next time.